After soaring on the back of rising effectiveness of artificial intelligence and the enthusiasm for AI stocks, BigBear.ai stock is down 27% in the last month, which has investors asking if they should buy the dip in BigBear.ai stock. I'll answer that question in this video, going through the company's prospects and weighing it against its valuation to determine if it makes sense for investors to buy this dip in Big Bear stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned Big Bear AI stock is down 27.43% so far in the last month. But if I show you a year-to-date chart in 2024, you can see how the stock price spiked in late February, early March. It was up as much as 100% on the year before coming back down, and now it's down 12.85% so far in 2024. So what's going on here? Why is the stock price down, and is it a buying opportunity? Well, if you look at the company a little bit on valuation, it's trading at a forward price to sales of 1.982. That's down from the peak valuation in recent years. And you'll notice that this peak valuation was just about the same as in January of 2023. You'll notice that it reached that level valuation and dropped back down, and then again here in 2024 reached that level and dropped back down. Now, I don't talk very much on technical analysis on my channel. I don't see that as a primary format for investing on effective investment. I don't see that as a risk-adjusted way of earning a healthy return on investment. Sure, there are some people that make good money investing using technical analysis, but when you consider the extra risk that's involved when looking at technical analysis versus fundamental analysis, the risk-adjusted return is not worthwhile. And so I don't talk very much about it, although there are a few cases where the technical analysis is so apparent that I must consider it, and this is one of those. This is clearly a resistance level for Big Bear AI. The valuation reached this level, dropped back down, and then reached that level and dropped back down again here in 2024. It's clear that investors, that's the limit for where they're willing to pay for Big Bear AI stock. When it reaches that level, investors say, we're not paying this much of a forward price to sales for this stock. And so sell triggers start to bring the price back down. And that seems like what happened with BigBear.ai and why the valuation caused the stock price to drop. Now, if you look at the company's operating profitability, it's not a profitable company. Its operating profit margin has been negative for several years now, negative 22.87% in the most recent trailing 12-month update, and we haven't seen very much improvement in the last year. You saw some improvement here in late 2022, but following that improvement in 2023, we haven't seen very much improvement for Big Bear AI. And if you look at Wall Street and what they're thinking about Big Bear AI, their expectations are that the company continues losing money on the bottom line. The current estimate is that the company will lose 22 cents per share on the bottom line in 2024 and another 17 cents per share in 2025. A small improvement, but when you factor in shareholder dilution, that's just spreading out the losses among more shares. It's not that much improvement on the bottom line for Big Bear AI. It's not like the other AI companies like Nvidia and Supermicro Computer that have demonstrated surging revenue, surging profitability as a result of artificial intelligence. Big Bear AI hasn't demonstrated that just yet. Now, it has some excellent prospects. Recently, it won an extension of a government contract, and so it has some prospects. It has the hint, it's on the cusp, but it hasn't yet delivered. And so it may have been too early for investors to get enthusiastic about Big Bear AI stock and drove the stock price higher in anticipation of those benefits before those benefits were actually achieved. So investors may have gotten too enthusiastic too early with Big Bear AI stock. Now, if you look at its cash flow from operations to sales, you can see a more clear improvement in this metric, although it's still negative. You can see it moving higher from negative 40% up to negative 11.8%. This is what I like to see. I would have liked to have seen this from its operating profit margin as well, but I like to see this. I don't mind companies losing money on the bottom line, right? There's a lot of companies that are losing money on the bottom line that I have recommended as buys. But what I need to see is steady continued progress towards profitability. I need to see a path to profitability. I need to see a business model that I can see how it's going to generate profitability. I can see favorable unit economics. I can see a lucrative business opportunity, and therefore I'd be willing to invest before a company reaches profitability. And so BigBear.ai is demonstrating that improvement here with cash flow from operations, even though it did not demonstrate that with operating profit margin. Now, BigBear.ai's balance sheet is also not in a great position. The company has $195 million in long-term debt and only $32.5 million in cash and short-term investments. Now, this unfavorable balance sheet is only worsened by the fact that the company is losing so much money on the bottom line and its cash flow from operations are negative. I don't mind to see companies that have this kind of balance sheet where their long-term debt is well ahead of its cash and short-term investments, but only if those companies are generating strong profitability and strong cash flow from operations, because then I feel like they can comfortably service their long-term debt without being in trouble, because their business is generating cash daily. But that's not the case with BigBear.ai. Not only is the balance sheet unfavorable, but it's also losing money every day in its business and therefore making this situation even worse. So that puts them a little bit under a time crunch to achieve improvement. Otherwise, this balance sheet could worsen. And when your balance sheet worsens, it doesn't just get worse incrementally. It doesn't just become like you pay interest costs of 2% and then you pay interest costs of 2.5%. Interest expense has a tendency to grow exponentially, not incrementally. So if you were able to borrow at 3% or 5% when your balance sheet was in a certain position, and then your balance sheet worsens over the next quarter, and then you need to borrow more money, you'll find that instead of 5%, you have to pay 17% or 23%, because incrementally, as you get closer to insolvency or as you get closer to not being able to service your debt, lenders increase their interest charges when they're considering lending to you, or they say, okay, we're not going to lend to you. Now, I'm not saying BigBear.ai is in approaching that, but as they get closer, with each quarter losing more money on the bottom line and the balance sheet worsening, the interest costs are going to increase, which then makes it even more difficult for the company to generate profitability, because interest expense is increasing and increasing and increasing, and that tends to lead to a negative virtuous cycle. So the balance sheet for BigBear.ai is a concern, as well as the losses in the cash flow from operations and operating profit margin. I would like to see the company make progress in 2024, achieving positive cash flow from operations, to at least, if they're positive cash flow from operations, that means their balance sheet will be improving, and thereby, instead of having that negative virtuous cycle, they'll flip that into a positive virtuous cycle. So to answer the question, is BigBear.ai stock a buy on this dip? I'm going to say no. I'm going to keep the company's stock rated as a hold, otherwise performing as the market performs, and I'm updating this recommendation today, April 9th. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.